Welcome, ladies and gentlemen. My name is Robert Roy, and I am the founder of Wealth Builders HQ. In this eMini basic training series, you will learn how to trade the eMini futures. Now, this video will focus on what are the eMinis. So let's jump right in. So what are eMini contracts? That's the first place we need to focus, is what the contracts are. And basically, if you look at an eMini future, it's referred to in many cases as just the eMinis, without the word futures there, and they are smaller size units of the much larger, more grown-up futures contracts that have been around for quite a while. So it's a mini-sized futures contract of the full or big future. Now, the eMini contracts are still relatively new to the scene, just about a decade ago, while the larger contracts have been around for more than 2 decades. Now, there are several futures markets that have developed both full and eMini contracts. The ones we're going to talk about for right now are the cash-settled indexes. Basically, they do not have a commodity backing them, such as oil or corn. Right? These are cash-settled, and we'll talk about cash-settled and what that is and how it works. But there are 4 majors that most people tend to focus on and trade. And the very first one is the ES, which is the S&P 500. This is the largest futures contract out there. It's also one of the largest eMini contract that is traded as well. So basically, if you look at the S&P 500, which is nothing more than a compilation of 500 stocks, you are betting on the future price of that index, and you're doing it with a futures contract instead of with the actual index. You're not going out and buying 500 stocks. You're not buying a mutual fund, which don't even get me started on the disadvantages to utilizing mutual funds. Fees are one of them. You can't sell or buy the position intraday. So if the market's crashing and you want out of your mutual fund, you are stuck until the day is over. It trades on the close. Now, the NASDAQ is the NQ. NASDAQ is simply the NASDAQ 100. And if you look at the reference between the S&P and the NASDAQ, you have the NASDAQ index, right, which is the NASDAQ 100. You have the Qs, QQQ, which is an ETF, an exchange-traded fund. And then you have the futures contract, the NQ, which is the eMini sized of that futures contract of the NASDAQ. So we could trade the entire NASDAQ with one contract and do so at a much lower rate than the stocks, having to buy all the stocks, buying the mutual funds, buying the ETFs. It doesn't matter. It is in my opinion, it is a much better consideration of what to trade. Then you've got the Russell 2000, which has a ticker symbol of TF. Now, the Russell 2000 is currently on the ICE exchange. There are some changes being made, so by the time you watch or get to see this video, who knows how long down the road from now, the Russell will have shifted over to a different exchange. There's a new symbol out for it, but the primary one that most traders are still using is the TF. It started as ER, and now the new symbol is RTY, and that's a temporary symbol. They're going to change it again once it comes off of the ICE. We'll see what it goes to at that point. And it just tracks and trades 2,000 stocks. It's a huge index. And then the Dow Jones, the eMini for the Dow Jones Industrial Averages, or the Dow 30, is called the YM. Of all the contracts there are that I just showed you, actually of every one that's out there, the YM is my favorite one to trade. It's the simplest one to learn, and I'm going to teach you in another video what the YM is and how it works, but it's the simplest one to learn. It's the simplest one to calculate what your P&L is, your profit and loss on the position, because it has a very standard move, or what's called a tick, but it has a very standard move to it. All of these eMinis have another thing in common. They are futures contracts for stock indexes. So all the indices that I just laid out, they are all from an indice. And each one of these tracks a different market. Now, it does not track exactly. If you added up the closing price of all S&P 500 stocks, you would not come up with an exact number to the S&P index. It doesn't work that way, right? It's close, and it doesn't have to be exact. It's in the ballpark. Now, there are eMini futures for other markets and other commodities such as gold and silver, crude oil, gas. There's even ones for the yen and the euro, the British pound. There's multiple ones that you can trade. Now, the newcomers are much less liquid than the stock index eMinis. So trading them can be a little tougher and possibly even riskier. Volume is something that you want to check on them. And we'll look at some examples of what happens, what's trading, and so forth in some of the upcoming videos that we're going to do, the other training videos for it. Right, so what the eMinis are, basically in a nutshell, take the Dow 30 as an index. That's where all Dow 30 stocks are housed. When you're looking at CNBC or another financial news that's on TV or getting quotes online from your broker, they quote the Dow, they quote the NASDAQ, they quote the S&P, the Russell, as well as others. So you took that index, which is made up of a series of stocks, a group of stocks, a basket of stocks. You can break that down into the futures contract where you are anticipating the future price of that position. All right, ladies and gentlemen, there you have it. That is the end of this video in our series. I hope it was helpful, and I will see you at the next video. Take care, ladies and gentlemen. Bye now.